Hey guys, how's it going? Welcome to the London session recap for Friday the 8th of April 2022, of course on Euro Dollar. So what do we know? Daily chart has pulled back to premium supply, right, above the EQ of the daily swing range. Nice impulsive move down after sweeping liquidity, right, strong swing break of structure, corrective move into premium supply, and then we've seen price essentially break through that internal demand chain. Bit clearer to see in the 4-hour chart, smash through with a lot of momentum, and ultimately we are probably expecting this low to be run, right? That is the path of least resistance we expect this week low to go. Doesn't necessarily mean it will just happen. We could reject some demand within this wick, we could mess around, we could do whatever, I don't know, right? We could come into supply, we could dump, we could pull the way back up here, then we could go, we could even potentially come higher. But we just run with the assumption that this week low will go, and then we can use the timeframes below as a bit of a guide, right? As you guys know, I kind of adjusted my 4-hour swing structure to be the same as the current daily range, essentially viewing this as one leg down, just because, ultimately, after we had that breaker structure here, none of this really is a swing pullback, nothing that significant in terms of the relative price action, right, until we kind of got this movement here. Okay, so this was just one big complex pullback, the same as the daily chart. Then we saw that demand go, right, and now we're expecting this week low to go. But like I was just saying, there is, going to be some demand within here. Now, exactly where you draw that 4-hour demand, it's a little bit messy. The way I've done it is I've just drawn it from the completely unmitigated part of this wick. But I am fully aware that pretty much sort of anywhere, within this section of price action, there is demand that stepped into the market here. It's just a bit messy to kind of call out, because if you were to draw it on this, let me just actually draw it, this 4-hour bearish candle, right, that's then engulfed, right, the next candles have come into it and mitigated it, right? So for me, that's basically mitigated it. Yes, you can refine it to the wick, right? You've got these wicks here, and that's basically what you can say price is coming off at the moment. But for me, yeah, right, it's not that convincing. Others of you have you've just drawn it from the wick like that. That's absolutely cool as well, and that's valid, right? I've drawn demand or supply like that plenty of times as well. It doesn't really matter that just the distal is mitigated. But the point I'm trying to make is it's all a little bit wishy-washy, it's all a bit messy. It's not super convincing, but I'm not too bothered anyway, because, well, to be fair, I should be bothered because I did take a counter trend long today. What I was going to say is, I want to focus kind of on the pro trend stuff. The counter trend longs are, whatever, right? It's the pro trend, the clear stuff that I want to be concentrating on. But as you're about to see, or as most of you would have seen on the markups, I did actually take a loss from that long. And it does matter whether you are trading from 4-hour demand or not, trying to play that pullback, because that will give it a lot more confidence. But I guess the point I'm trying to make here is that where price currently is, it's not that convincing as clear cut 4-hour demand from this level to play a bit of a pullback, kind of just back in towards the sort of messy 4-hour supply that we have here, right? This is 4-hour supply that did lead to an internal breaker structure here. So yeah, kind of coming into London today, it's not really that good value on the higher time frames. It's not really clear cut 4-hour demand for me just yet. If we were right within this wick, then I'd have a lot more confidence just to play a bit of a bounce here, a bit of a 4-hour pullback. In terms of shorts, again, don't really want to be selling down here, right into sort of all of this mess. It's very, very poor value. At least wait for a bit of a pullback into around when we have some 4-hour supply here that swept the high. Okay, so if we drop down to the 15-minute chart, all right, coming into London, we were around this level down here, okay? So we had switched bearish during Asia, not switched bearish, we continued the bearish trend. We had a bearish boss down here, and then we were kind of just correcting around, right? Kind of getting that nice corrective price action, which is typically what you will see then before price starts to pull back. So really, we want to be focusing on the pro trend shorts. Right, we had this nice supply chain forming here with the 1, 2, 3 that flipped the demand here and led to a break of structure. However, major downside to this one is that it's poorly priced still, right? The EQ is above here, so really we want to be focusing on these premium supplies for the pro trend shorts. Of course, we can then look to play that counter trend longs, to play the pullback up into those supply levels being met. But ideally, we want price to have mitigated some demand, right, before it makes its move. So when price was around this level here, if we go and scroll left, when we get there, all of this was already mitigated for me on the M15, right? So not really viewing that as any of that as fresh demand to use, and I'm looking at these two levels down here more within that 4-hour wick, which is why I was kind of trying to be patient and wait for that. But as sort of Frankfurt European volume kicked in, right, and London, what did we get? What did we see? Well, we had this supply chain forming, right, kind of towards the end of Asia. We then had these sort of little equal lows. It's a lot clearer in the M1, but we was, you've got all of this liquidity here, essentially that floor. Price then sweeps that liquidity, right, because it goes down and it comes back up, so you kind of get that aggressive sweep. We get our M15 bullish change of character, because if you look at the price action, right, pull back, down, up, down, so then we take that high. So that's our bullish chock. We then come into that supply, so this is the unmitigated part of that supply chain. Price reacts, fails to put in a lower low, right, and then price breaks up and closes above the reaction. So now supply has flipped to demand, and we've had our bullish change of character. And the way I was viewing it at this point, use a bit of bar replay, might be easier to just talk it through. This is how I was viewing it. So I was like, okay, we've had a break of structure in the M15, we're expecting an M15 pullback. We're sort of in 4-hour demand, but not really. But I'm expecting there to be, we're at good value, at extreme discount potentially to play those larger pullbacks. We've had a liquidation. We've had our change of character here, and we've now had a decent amount of momentum. It's a reasonable V shape. It's not the biggest in the world. Seeing the nearest supply fail, and then for me, just seeing this initial supply chain is failing. So now I'm looking to get long from within this flip to play a quick long, right, potentially up and towards that next supply chain, but probably taking a hefty amount of my profits off around sort of that 5 to 10 hour mark, right? So that's how I was looking at that. Not in love with it, but it was there. Start the session. If we get a clean M1 entry, then we can take it. Now at this point, there was actually a bearish change of character for price to come back here. Okay. Because it's a bit of a subtle one, but you see how this has a white candle body, which means it's an inside bar. Why is that an inside bar? Well, because it failed to break the prior candle's high, right? You can see that. That means we had a pullback here, right? Which means that that is then an internal high. Price then takes that internal high, which now makes this an internal low, and then obviously price comes back down and takes out that low. Okay, so that here is a bullish IBOS, an internal break of structure, continuing the internal bullish trend, right? And then we take that internal low, which now means the internal trend then switch bearish. Now, this is where change of character gets a little bit tricky, and this is something that can kind of be hard to explain to people who are new to this concept. Because changes of character is obviously very, very aggressive, they happen everywhere and frequently. So sometimes it takes a bit of nuance and experience to kind of know when to pay attention to them and when to not. Because a lot of the times what can happen is price can come into a level. Imagine this was a really nice level. Of course, it wasn't in this case, but imagine this was a real nice clear 4-hour and M15 demand zone. We then get our bullish change of character. We get our supply chain fail. We have a flip that we want to get long from. But then in order for price to just quickly pull back to that level, right, to fill up that demand, sometimes this will happen, right, where there may be a bearish change of character, which isn't ideal, right? I prefer that it wasn't there, but I've seen these trades play out more than often than not in terms of you've got everything you need to see, you have a demand level, but price might need to change character to get back there. In that case, yes, it's not ideal, but typically I'll ignore it. You don't have to, you could keep it super mechanical, but it's still a valid chock is what I mean. But in terms of how you interpret that, are you going to let that put you off the trade? In this instance, I didn't. I was still happy to look for longs from within here, even though I knew overall it's a pretty aggressive setup. It's heavily counter trend, right? Against M15, against 4-hour, against daily. We haven't really come into a clear level. But this is the way I viewed it, right? Liquidation, decent amount of momentum coming into European volume. We'd seen this immediate supply chain fail, and we had a flip to trade from. So, if I can get a trade from within here, I was happy to accept the risk to try and push price up here, right? There was more than enough risk to reward to at least get 10-hour up to that level. Now, the downside to this, and I did have this aware back in my mind, but I was happy to trade through it, was ultimately kind of, this supply range, or the extremity, I guess you could say, of this small move, right? Still at this point had not been cleared out. So I knew there was, a decent chance this could hold and we could push down lower. But again, I was happy to just basically read that as the supply chain starting to break through, following the mitigations. So yeah, ideally it would have been nicer, right, if price had clearly cleared out all of this, clearly cleared out, what I'm trying to say, right, clearly broke through, then came back down and then done that, and then we could have looked for that. But it is what it is. I'm just being picky here and kind of trying to show you why it was an aggressive trade and what you could wait for if you wanted something lower probability. So as we can see, we got a bit of a bounce. That's where I took an M1 confirmation entry. Then I got stopped out, and then we pushed down further. So that at this point, right, I know some of you took some shorts within here. That's cool. I understand the logic behind it, right? M15 supply, it makes sense. You're trading pro trend. For me, it was too aggressive. I couldn't get risk reward into this demand. I was more of the opinion that supply chain had failed. And I was thinking, that's more likely to happen. So even though there was a short within here, you could have taken that as a hedge into the long. For me, it was just far too aggressive. Very, very poorly priced as well. Of course, way in the discount. So yeah, it just wasn't something I'm personally looking at or considering. Now, once we've broken this low, okay, cool. Maybe we'll get another opportunity to play the counter trend long. So waiting for price to come to 4-hour demand. And then we had some big volume kicking in, right? And then we got a bullish change of character. So what I would say is at this point, if you're going to look for longs down here, at least wait for an M15 change of character, right? You're trading against the M15 and the 4-hour trend, right? We haven't mitigated any supply to the left. Arguably unless you've kind of drawn 4-hour supply a little bit looser, but there's nothing on the M15 to the left. So jumping in on the M1 down here, you're asking for you might get the odd one that works and that's cool, but invariably it's very, very aggressive, right? You're trying to catch a falling knife. So at least wait for that M15 change of character. If you can do it, or at least wait for it to come into some clear demand, right, before you're going to start looking for entries on the M1. And that pretty much brings us to where we are. So then we came into that supply chain. Now, I would have personally, I was looking for an M1 entry within here, even though again it's poorly priced, right? The EQ and the premiums all the way up here, but I liked. There's enough confidence here for me. It essentially flipped this demand here, right? And following the mitigations, swept liquidity, continued down, viewing all of this as nice inducement. So yeah, if price came into here, happy to start looking for an entry. But you are trading against the M15 internal trend at that point with quite an aggressive amount of movement into there, which I really didn't like. Then it basically brought us to where we're now at the end of the session. So yeah, not obviously interested in that now. So let's take a look at the M1 price action. So we got that initial liquidation, which we can see here is pretty clear, right? Nice equal lows, aggressive movement in and aggressive movement out, which is sort of the characteristics definitely the characteristics that I want to see for a sweep. So this is where there was an early pre-Frankfurt long where price came into that supply, right? It's a little bit messy, but you can see the reaction, right? Clearly failed to put in a lower low. Demand then stepped in to take over. So obviously you can trade it from the top of the reaction to the base of the reaction. That's quite a large zone. So you can, of course, then refine that a little bit down to the extremity of that reaction. So that was a potential entry there. Pretty aggressive, but you do have an M15 chock on your side. But then again, you're trading against that M15 supply chain. So not something really I'd personally be looking to take, especially as it's pre-session. Then we got that initial supply fail. So this is where, to me, it's a lot higher probability because you also then have M15 demand. You have an M15 supply fail, you have the M15 demand that caused that initial supply to fail. You have an M1 sweep zone within it, following that M1 chain, right? So now you're starting to see that sustained M1 bullish order flow, right? You can see how this, in my opinion, has a lot more confluence than, say, trying to get in so early down here. You also have inducement. So yeah, you could have taken this as a risk entry if it's within your plan to, of course, play counter trend longs. That was also valid. That was something I was considering, but because we hadn't mitigated something significant here on the M15 on the 4-hour chart, I was a little bit more wary. So I was like, okay, I'll play an M1C from here. So then this is where, again, this was I didn't like it really, because as price came into this level, right, where's the chock I would need? The internal high is up here at this point. All right, and then what happens? Price pulls back, then it takes the low. So then when it takes the low, we can then adjust our chock line down to this level here, right? Then what happens? So then we get our chock. I was thinking, okay, sweet. Then I can enter on the confirmation entry. But now this is where it's not ideal because price closes back down here. So just ignoring chock for a second, but just thinking, what is the most basic level of a demand zone? It should be a bearish candle that's engulfed by a bullish candle. And if we look here, the high of that candle is 607 and the close of this candle is 607. So technically it did not close above that wick. So technically you cannot draw M1 demand on here, okay, if you're being super strict. That's why, although we had the chock, because price then failed to close above the wick, technically that is not M1 demand, okay? So this is where it's up to you if you want to use a little bit of discretion, a bit of nuance, because there will clearly be demand here on, say, the 30 or the 15 second or whatever, right? There is clearly demand here, but technically from an M1 level, that is not M1 demand. So for me personally, at that point, I didn't like it, even though we'd had the chop. And yeah, I didn't set my entry. I'm just drawing the chop back on. So then at this point, you can see what obviously happened. If you had taken it, you would have been then in that trade, because price comes in, mitigates that lower time frame demand, right, within this wick, the seconds or the 15 second whatever time frame, and pushes back up. Okay, so then at this point, what happens? Price pushes up. Not ideal coming into M1 supply, but again, I expect that to fail, because my personal view was that the M15 supply had failed. M15 supply had flipped to demand. Right, we had that bullish order flow on the M1 demand, coming to a sweep zone, etc., etc., and I'm looking to play that M15 pullback. So of course, you're going to have to try and trade through some of this. And this is in the middle of the leg. It's not like it's gone all the way up. It'd be a bit different, right? If price had gone all the way up, mitigated here, and then was coming all the way back down, right? I'd be a bit more hesitant, because then it would look like this low has failed to take out the high, right? Even though those can still play out, it's just a little bit lower probability. Whereas this coming into the supply, right, I'm not that bothered to then look for to put me off looking for the long, right? I'm essentially now looking to play the DCE at this point. So set my order on that wick, essentially just trying to follow the M1 demand chain. Got tagged in, started to move nice initially, and then got stopped out. So didn't get an opportunity, obviously nowhere near 4R, to remove my risk. So that was -1R trade. No worries at all. I accepted the risk. I knew it was a bit aggressive. Hopefully I've kind of explained all the reasons as to why. But I've seen these setups play out way more often than not. So I was happy to take it. But yeah, it's not the best trade. In terms of the overall higher time frames, right? So yeah, that's why. And then pretty much after that, not really interested in anything until we then came up to that M15 supply. But obviously we'd had a very big, strong bullish change of character. We came into that M15 supply zone, into that nested M1 zone within there. What you really want to see is you want to see M1 demand start to fail, which we did see here, right? M1 demand clearly failing, and here as well, right, technically. So clear M1 demand fell, which is decent. Starting to see M1 supply potentially hold, but there was no clear liquidation. And when you're trading against all of that momentum, this can work out, and I have seen trades like this play out, but it's a lot riskier. So what I really want to see is, clear liquidation, mitigation, and then we can get involved. Because otherwise this can then become the trap, that can become the liquidation, and then the move goes, right? So what do I always say, or I try to always say, is if you're going to take a more aggressive M1 entry model, i.e. you're not going to have all of the perfect criteria that we want to see, ideally you want to be doing that from the higher probability, higher time frame POIs. So what do I mean by that? Well, I mean, if that sort of aggressive price action occurred at this extreme here, this is obviously really high probability, so I can be a bit more aggressive, let's say, with my M1 entry model, because I just want to get in at that point, because this is the area, this is an amazing area of value. Whereas down here, this is not that well priced. We've had a very aggressive movement into it, bullish change of character, and I'm probably expecting price to pull back up to that premium. We're also, an extreme discount of the 4-hour range. Arguably, we are, mitigating for our demand as well. There's, a very high possibility of that. So, do I aggressively want to jump in here? Not really. So I marked that out, but I don't really have confidence in taking it. So what I would have wanted to see, or what I was looking for, is for price to come into here and then ideally give me a quick CE from that level, or basically give me another push down and then another pull in like that. Because at that point, we'd have essentially your DCE, we'd have supply holding, and I would have counted that as somewhat of a liquidity sweep, not quite the sort of textbook liquidation I want to see into a POI, right? That's obviously the cleanest high probability setup, but at least then at that point, if that had mitigated that level, we'd have a mitigation, we would have had another break of M1 structure, we would have had that as a sweep zone, and then I would have been happy to look at that to then try and play that move into here, because I'd be able to remove risk, right, in case we start to do this and push up higher. So yeah, not the best. So what I would say, as always, for those who are looking for consistency, for those who are a bit newer, for those who just want to stick to those high probability setups, just chill, wait for price to come to those Pro M15 moves. Yesterday, we did get that. Obviously, it was quite tricky. During New York, I had a quick look through, and yeah, I would have got slapped quite a few times within there. I think there were a few valid setups, and then there's always that tricky ones, right, when price sweeps the M15 swing high, where it's hard to tell in the moment, is it going to continue the trend, or is that going to be a supply fail and then continue on bullish, right? So that was a bit of a tricky day, but all in all, we know, zoom out, think of over the course of a month, 2 months, 3 months, a quarter of the year, being patient, waiting for those Pro M15 trend setups in the premium if you're shorting, or in the discount if you're buying, of course. Textbook M15 beginner trade plan. just chill and wait for those setups, right? They're the ones that are going to pay the bills at the end of the day, and most likely hit all of the training goals you could ever dream for. So I will continue to die on that hill and push that boat out to you guys. I know there's plenty of art to be made trading the counter trend stuff and trading the more aggressive setups, potentially, selling off in the discount and things. But my hardcore belief at the moment, maybe it'll change in the future, is if you want to get consistent and you're not yet, you should not be trading counter M15 trend. And you should not be selling in the discount or buying in the premium for the most part, okay? Until you can manage that, until you can be disciplined to wait for it, until you can master that, you have to earn the right, in my opinion, to then go and do the more aggressive and advanced stuff. You don't have to listen to me. That's just my, my humble advice from my experiences and what I see works best for most people. But take what I say, do what you want, right? And I do mean that generally. Just make sure you have clear rules, make sure you test it, and make sure you clear back data up, because the guys and girls who I see in the community who maybe are a bit more aggressive or who have taken what I've said, they'll take elements of it, so they'll only trade pro M15, but they might still be willing to trade more aggressively and sell in a discount, and that's cool. But they've got data on it, they put in the work, and they execute it flawlessly, right? They know it's more aggressive, and therefore they don't let it bother them too much if they take 4, 5, 6 losses in a row. They just keep executing because they know that when they get that winner, that high RR is going to cover it. That might not be to everyone's taste or to everyone's psychology that they can handle. But the key point I'm trying to drive home here is, if you are going to do that, you need to have collected the data, because that then proves to your subconscious it does play out over a large sample size of trades. And because they put the work in to test that and prove that to themselves and to show their subconscious, that's why they are then able to continue to execute it flawlessly through those sort of more difficult drawdown periods. Okay, rant over. I'll leave that there. Hopefully you guys took some value from that. Enjoy New York if you're trading it. Have a good end to the week and a good weekend, and I'll see you next one. Cheers, guys and girls.